Euro dollar. So euro setbacks have been supported in recent trade, though overall the story here is the market's ability to be well capped into the 115 or ahead of the 115 area over the past several months. We did see a break up in August, but looking back to May, June, September, and now this latest rejection in October, the market is focused on the downside and looks poised for a resumption of declines back down towards that low from September at 110.87. At this point, on a short-term basis, we need to see a break back below the low from Monday that comes in right now at around that comes in at 113.06 to keep the pressure on the downside and accelerate declines. But again, only back above 115 would compromise the current bearish structure. Sterling dollar. So cable rallies continue to be very well capped in recent trade above 155, and the market looks poised for a bearish resumption back down towards recent lows and then eventually towards psychological barriers at 150. At this point, looking at the structure going back to the 2015 high at 159.30, it does look like the market's been trying to sort of trade lower, putting in a series of lower tops. And while the market holds below 156.59 on a close basis, this does favor additional downside. Dollar yen. So despite the recent recovery rally in dollar yen, the market remains confined to a broader consolidation with a slight bias towards the downside given the breakdown that we saw back in August. At this point, a lower top is still sought out in the 121.74 area with deeper setbacks favored over the coming sessions back down towards the August low at 116.12. Given that, as such, the market should be very well capped into additional rallies over the coming sessions into the mid 120 area ahead of that bearish resumption. Euro Swiss. So Euro Swiss isn't doing much over the past several weeks and months, though the recovery structure since the beginning of the year remains intact, and the market is continuing to expect it to be well supported above 107.14 in favor of that next upside extension beyond recent highs at 110.50 and towards 112 further up. Aussie dollar. So Aussie dollar remains locked within a well-defined downtrend, though the market has been putting in signs of a nice recovery over the past several days. At this point, look for a break back below recent lows that we saw at 71.98 to accelerate declines, while inability to do so will keep this consolidation intact. Ultimately, though, a break back above 74.40 would be required to force a shift in the structure. Dollar CAD. So dollar CAD has finally come into some solid previous resistance, now turned support in the 128 area, and the market has since bounced, looking for a resumption of gains and a resumption of this stronger uptrend. Look for an eventual break back above the 11-year high at 134.57, while only back below that at 128 figure would compromise the current structure. Kiwi dollar. So Kiwi is finally showing signs of stalling out after the market rallied up just shy of 69, and the market could now be poised for a bearish resumption back down towards recent multi-year lows. At this point, only back above 70 would compromise the bearish outlook. SPX 500. So the S&P 500 continues to be very well bid over the past several sessions, though after a 200-point plus rally since August, the market could be looking for some form of a lower top in favor of a bearish resumption. At this point, there's some good resistance into that 2030 to 2050 zone, and we'll be looking to see if we can get that lower top. We need to see a break back below and a close below 2019 to confirm and accelerate declines. Only a close above 2050 would compromise the bearish outlook. Gold. So the gold recovery structure remains well intact since breaking back above 1170 several days back, and the market is now focused on fresh upside towards 1233 over the coming days. At this point, setbacks should continue to be very well supported on dips towards 1150, while only back below 1135 would really force a rethink of the structure. That's all for now.